I think that we've hit the bottom, right? In the metals prices. When you start to see this big of a jump moving forward in 1 month, it's like the trend has changed. We're in this moment in time where the consolidation is over, like that chart that we saw with the descending triangle on US Treasury yields. We're seeing the same. The chart looks the same.
It's great to have Dr. Kirk Elliott with us once again. amweknow.com/gold in the description box below. A lot of great things going on. I watched silver go up this week. Tell me what's going on.
I mean, it is really good. Sneakily, we've seen silver on hitting its low on July 7th at 56. Now it's over 64, right? So literally in 1 month, it's up over $8 an ounce. I mean, that's really quite good. Because when you annualize that, I mean, that's up maybe 14% in the last month.
Right.
We'll multiply that times 12 if we were to stay on this pace. That's well better. That's over 160% for the year. That's greater than the rate of growth from last year when silver went up 147%. Now, I'm not saying that you're going to stay on this torrid pace all year long, right? But what I am saying is the bull market seems to have resumed, right, after this consolidation since January 30th. And last week when we talked about the whole Japanese yen carry trade and the Federal Reserve's response to that and what this is meaning to the new paradigm globally in the monetary economic world, right? This week, I want to continue on with that, but I want to go into more explicit detail as to why Secretary of Treasury Bessent did what he did.
Okay.
Because it's important to not that he just did it, but to understand why he did it. So I shared with you a couple of charts, right? So the first chart shows the massive amount of debt that we have in this country as a percentage of GDP. So US private and public debt as a percentage of GDP. I mean, for people whose maybe screens are smaller that might be watching this on their phone, right? It's like, what is it? It's literally over 400% debt to GDP, public and private. Now, when you look at just public debt, which would be our national debt, right? The $39 trillion of federal debt, we're over 100% debt to GDP. Now, historically, whenever a country has gone over 100% debt to GDP, it becomes mathematically impossible to pay that back.
Right.
Right? Because the debt service on your massive amount of debt, you have to offset that with something. Tax revenues, just normal economic growth, trade differences, funds from tariffs, right? There's no way though, when the debt service on our 39 trillion is over $1 trillion a year, that number was when interest rates were less than 3%. What are they now? They're well over 4%. So I remember on this show maybe 3 weeks ago, I think it was, we talked about what is the average mortgage rate now on a 30-year mortgage. It's over 7%. What is the prime rate? Well, the prime rate is 6.75%. That's where banks are lending to their best customers. So you're looking at these rates that are going up. The federal funds rate has gone from less than 2 to 3.63%. It's like, okay, this is a problem, right? Because interest rates over the last couple of years have almost doubled, right? It's like, well, they're only up a couple percent, right? Yeah, but when they started at 2% and now they're getting closer to 4%, it's like, yeah, they've doubled, which means the debt service has doubled.
No.
Right. So you look at all of our debt, you look at this public and private debt. Now, 38%, this is why Scott Bessent had to do what he had to do. And this is the being granular on his decision, right? So everyone understands why this is such a big deal and why he had to do what he had to do to save the dollar, right? So, how much of our federal debt is actually short-term debt? The answer is about 38%. So
Okay.
when you look at the close to 40 trillion that we have, almost 40% of that is short-term debt. So we're looking at actual numbers. $9 trillion of our debt has to be refinanced just by the end of this year. So when you've got debt that maybe they got it at like in the 2%, 2.5% range, now they're going to have to refinance it. The federal funds rate is getting closer to 4. It's like, good grief. What are they going to do? They have to refinance and roll over the short-term debt, which is 38% of all of our debt. Okay, so this is why Bessent had to do what he had to do with Japan and bail them out with a $90 billion bailout in one day. Why did he have to do that? Because Japan is the third largest owner of US treasuries on earth. Number one is the Fed. Number 2 is China. Number 3 is Japan. So when Japan can't pay, they don't have the ability anymore, or the desire, I should say. They don't have the desire to keep bailing out their own currency because the inflation is so high and their currency is devaluing like crazy. They can't afford to keep bailing out their own currency, so they're leaving it to the rest of the world. Now, if Bessent wouldn't have bailed them out, what would Japan have done? They would have had to start selling things. They would have sold their US treasuries, which would have tanked the US dollar. It would have tanked the bond market, putting that much on the open market all at once. It's like excess supply. When you have high supply and low demand, the prices are going to falter. Now, look at this other chart that this is my chart. This is what I was digging up this week on some research. This is the 30-year yield, 30-year treasury, their current yield. So you look at this, and this goes all the way back, decades, and it's been coming down. Then it started to go back up. So where are we now? We're at the end of this consolidation kind of moment. But if you look at that consolidation, I put a little triangle on there. So that's, in technical terms, it looks like a beak, right? It's a descending triangle. When you get to the end of that triangle, to the point, and the interest rates start to go above it, there's going to now be kind of a breakout in price. Just like if you were to see this formation in gold, which we actually see this formation in gold. When you see this formation in silver, what are you going to do? If you start to see a breakout above that triangle, that means that the prices are going to go up. In this sense, what is it that's going to go up? It's the yield, right? So when the yield on treasuries goes up, the value of those bonds comes down, right? So we're in an era right now where technically and fundamentally looks like we're going to get higher interest rates, right? And when you have that, the value of the bonds comes down. So what is the propensity of any country, not just Japan? The propensity is, yikes, we're seeing that the chances of yields going up is really strong, technically and fundamentally, and the value of those bonds is coming down. We better get rid of our positions now because we don't want to wait. Because if we wait, it might be lower and lower and lower, and we'll be selling them at a much lower price. I was just a kid at the time, but I've read stories and, historical, testimonials from people that were in the bond market, professional bond traders, VPs of Merrill Lynch and so forth back in the early 80s. So what happened in the early 80s? Interest rates went from like 7% to 18% in about a year, right? So then anybody who was around back then and thinking, how in the world did we get a mortgage when interest rates are over 18% on a 30-year loan. I mean, it was wild, right? But that's how it was. So imagine you're a bond trader in a rising interest rate environment like that. Who is going to buy the bond knowing that when interest rates are going up, the value of those bonds are coming down? And you're
Sure.
going to buy something and you know that probably the next day it might be even a lower price. The next day it's going to be a lower price. Nobody buys something when they know that the trend is going in the wrong direction. So the bond market could become illiquid for gains, right? That everyone that's going to be selling just because they need money, but they're going to be ultimately selling at a loss. That's what this chart is telling us. So Besant had to do what he needed to do so Japan didn't start selling their treasuries. Now, here's the problem and why he needed to do that now. Because we've got $9 trillion of debt that needs to be rolled over, refinanced by the end of this year. If the rates kept going up because countries start dumping their US treasuries, the United States is going to be forced to refinance and reposition and reallocate their debt at much higher interest rates. So it's almost like you're staving off the inevitable here. And what's interesting about all of this is Janet Yellen, Biden, back in the day, you know, they're the ones that put us into some of this short-term debt, knowing, not trying to start a conspiracy theory here, but knowing that these things were going to come due, have to be refinanced during this administration.
Yep.
Right. And so it's like now we're forced with everyone saying, oh, the Federal Reserve, they're stupid and look what they're doing and look what Trump's doing to the economy and this inflation and all these interest rates and everything. What he's doing and what Besant did was save the dollar from actually an accelerated collapse, which I still think it's going to come down. I don't think that there's any way that country after country after country is going to continue to bail out the yen, which has been the stimulus to global growth since 1999, because we did it this month, right? It was the US that dumped $90 billion into the yen. Well, who's it going to be next month? Is it going to be the US again? Or is it going to be the European Union? Or is it going to be Germany? Who is it going to be? We don't know. But
Right.
now the table has been set because we know Japan's not going to do it on their own. That's what they've already signaled. So the next country is going to say, well, the United States did it because they didn't want Japan to dump their treasuries. Now, did the US actually, how did they fund this? Right? Which is a question. They sold European treasuries. They sold the European treasuries that we owned to do this, not the US dollar, because selling that much of the US dollar would have started to tank the dollar.
Right.
So they sold European treasuries instead. Other countries are going to start playing this game. LT, I'm telling you, this is the beginning of, I think, currency wars, an inflationary period like nothing we've ever seen. As this system of central banks, fiat money, debt spiral that has defined the global economy for decades is unraveling right before our eyes. Now, what is responding to that? Precious metals are responding to that right now. This is why silver's up over 14% in the last month.
That's right.
I think, no guarantees, right? I'm not God. I don't control the markets, but I think that we've hit the bottom, right? In the metals prices. When you start to see this big of a jump moving forward in 1 month, it's like the trend has changed. We're in this moment in time where the consolidation is over, like that chart that we saw with the descending triangle on US Treasury yields. We're seeing the same, the chart looks the same on silver. It looks the same on gold. We're breaking out of that descending triangle, which means higher prices are coming technically. That's what's exciting about that time that we're living in. It's not exciting to live in times of turmoil and chaos and fear and all this other stuff that seems to engulf us every day.
Yeah.
But what is exciting is when you're allocated into the right thing at the right time and you can take advantage of all of those negative things I just said, turn them into a positive.
Yeah.
And that's what we're here to help do.
Yeah. Yeah. I don't know why I'm thinking of this now, but kind of reminds me of what you did years ago. You waited in line for, I don't know, a couple hours in Nashville to meet the crew with And We Know. And I was so impressed by that. I said, I really need to talk to this guy a little bit more and find out what he's all about. You didn't try to tell me what you were actually doing or what you're a part of. I had to find out by researching. And to have you on board at that time, I mean, I just remember silver was like 19 or $20. And you were sounding the alarm back then. You're like, guys, it's going to go up. It's going to go up. And then here we are, above 60. And we're watching this play out again, the same type of thought process where now even more so, it looks like it's about to shoot up again. And all the signs are there, and you've been warning us for so long. And man, you could just feel it.
Yeah, you can. It's, a lot of it, when public sentiment kind of comes down, right? It's like this consolidation that we've seen since January 30th, people just got tired and they thought, man, is this ever going to end? Is it ever going to grow like what Dr. Kirk and LT have been saying that it's going to do? And it went up to 120 and then came back down into the 50s, and now it's going up into the 60s. These consolidations and these corrections are healthy. Any bull market, I don't care what it is, stocks, bonds, mutual funds, real estate, gold, silver, oil, doesn't matter. You all have 2 steps forward, 1 step back, 2 steps forward, 1 step back. We, I believe, are at the end of one of those 1 step back periods, which is a normal retracement in any market.
Right.
And now it's time for it to grow. And when you've got these weird things that are happening globally and things that you've been warning about for years happening on the global economy.
Yeah.
Right. And now we're starting to see the fruit on the tree in the manifestation of those seeds that were planted by the globalist and by some of these big international bankers years and years and years or decades ago. They're now coming to fruition. And we just happen to be the generation that's alive when I think that money as we know it, issued by the central bank, is changing. I mean, we just happen to be alive when I believe that that's happening. So take advantage of it. Don't let that fear paralyze you into doing nothing.
Yeah.
Take advantage of it.
Yeah, it reminds me too, when we were talking about we here always look at things on the Intel board, the Q board, we call it. We talked about this a month or so ago, and I showed you where it says gold will destroy the Fed. And it seems that like that's part of the whole thing too. It's all playing out in such a way. Well, if gold's going to destroy the Fed, and we know that, then what a great time to jump on board with it, because many folks are sounding the alarm like, hey, I'm watching on X too. Other folks are posting things like, hey, Rand Paul just said that the gold's there. He said that a couple days ago. Like, why do people keep talking about this? Maybe people, and it's interesting because they're giving them time too. It's not like just boom, here you go.
Yeah.
We've had a lot of time to really look into this and think about it. And those that are just waiting for that last little thing to happen, well, I think this is it. And so it's just great to have you let us know. They could bring their IRAs over, correct?
Yeah. IRAs, old 401ks, old 403bs, actually current 401ks, if you're over 59 and a half, brokerage accounts, just like normal cash accounts, right? So, but yeah, I would say 70% of our business of people reallocating their positions is coming from IRAs, because in times like this where wages aren't keeping up with inflation, people that have available capital outside of retirement plans, it's not an awful lot right now for a lot of people, and it's just a function of the economy. But you've worked your whole life building into your retirement, so yes, you can reposition your IRAs and your retirement plans into physical metals. I'm not talking about paper, not ETFs, actually physical bars and coins, generic 1 ounce refinery rounds, 10 ounce bars, 100 ounce bars, some
Yep.
cases 1,000-ounce bars of silver, just straight bullion. You can do it. Just give us a call if you have questions.
Yep, I love it. I've got mine stored with you guys, and you helped us out with that, and I keep up with it. I log into my account, I see how it's growing, and it's really cool. Anytime I want. So
Anytime you want.
yeah, we appreciate you guys. And we know.com/gold in the description box below. So many things going on, and we just really appreciate your time that you give us for all of these updates.
Yeah, it's my pleasure. We'll talk to you soon.